Good morning and welcome to The Street Live. It is Wednesday, December 16th. I'm Catherine Ross and I am joined by Jim Cramer. Jim, the markets are slightly up, but this is after multiple news reports about getting closer and closer to a stimulus bill. So what kind of approach do you want investors to take until we see a bill actually hit the floor?
Well, look, I think people have to understand that the market's been up in part because we did expect a stimulus bill. It was almost inconceivable that we wouldn't get one. Even Senator McConnell, who's been an obstacle to it, has come around to that view. But I want to tell people there's a wall of cash that would be coming into the stock market because if everybody gets $600, well, I tell you, I mean, not everybody needs the $600. Many people need 5,000, 7,000. But it's not going to work like that. So look for another wave of buying. There's a suitability lawsuit filed by the state of Massachusetts against Robinhood. I don't get that at all. There's a federal system with SEC, but I think that this money's going to Robinhood, and I think that people should recognize that this is going to happen, and they're not going to sit idly. They're going to buy stocks, and we got to focus on what they're buying, so we can help them.
I want to get to that Massachusetts news soon, but first I actually wanted to bring up Bitcoin, and I know that we are about to excite our viewers because Bitcoin did cross that 20,000 threshold. You recently bought Bitcoin.
I've been
What
buying
kind of approach
Bitcoin
do
ever
you
since I was
suggest?
interviewed by Pomp. When I was interviewed by Pomp, a lot of it was about how to buy Bitcoin. So when I finished the video, I just went and did exactly what I said I was going to do, which was an unbelievable price. I checked again this morning. I'm trying to figure out whether I want to buy more above 20,000, if only just because I didn't complete my buying. What I tried to do was just buy every month, buy a little bit, and I didn't get all that I wanted in. But I will say this: the more people, the more companies talk about it. I mean, there was a piece today by Moffett Nathanson, one of my absolute favorite analysts, Lisa Ellis. She talked about Bitcoin, and PayPal talks about Bitcoin. Square talks about Bitcoin. I mean, Bitcoin's going to be, it's not going to be the coin of the realm, but it's an added diversification, just like gold. I've got gold and now I have Bitcoin, and I wish I had more Bitcoin, but I like to buy things lower, not higher. And now it would affect my basis in a negative way. I hope it pulls back. I looked at the prices yesterday. I said I think it's going to break out, but I didn't have an opportunity to be able to do anything because of all the work I was doing.
So, Jim, we both are a little too old to believe in Santa Claus, but that does not stop us from perhaps believing in a Santa rally. So, do you believe? Can it happen?
Yeah, I mean, I was going back and forth with Larry Williams, legendary technician, and we both know that this is a very seasonably positive time. It doesn't last all the way. When you look at the last few years, it's not been seasonally positive because there's been such news flow. And a couple years ago, Jay Powell had come in and he just wrecked the market in December. I remember because he wrecked my vacation. I mean, I had to be on every day from an undisclosed location. Obviously, now it was pre-pandemic, but this is a time when you can't fight the tape. That was a Marty Zweig, the late Marty Zweig, who was an unbelievable technician. Said that that's just doesn't work right now. I believe in the Santa Claus rally. I believe that there is a lot of cash on the sidelines, $5 trillion. That's what the number you should focus on. And I believe that interest rates are still so low that you're just not making enough money. So therefore, money finds its way into stocks, and a lot of the money finds its way into the S&P 500, and that buoys stocks. Now we got the S&P 500, the Tesla edition. We don't know what's going to happen with the Tesla edition. That could be very interesting, but I don't think it's going to take money out of the market. I think it's going to bring money into the market.
So, Jim, on Mad Money, you said that the market no longer cares about the COVID-19 vaccine, and we've seen that play out. But
Right.
if investors are looking to keep up with the market, what's your advice during the holidays?
Well, I mean, I understand. I was just talking about you don't want to go buy Moderna, which was downgraded by a bunch of places. My advice for the holidays, I checked in with J&J. You know, they're on target. We want to see something from J&J. We want to see something from J&J. Maybe they announce it at the beginning of January, but that's the one a lot of people want to take, including me, because it's one shot. And I happen to think that J&J is a great American company. So is Pfizer. Moderna is a new company. I don't know, but during the holidays, what I want people to do is look at their portfolios and don't be pigs. I'm seeing it again. I'm seeing people making so much money. But remember, no money is made until you take it off the tape. All right. So let's say you own half a share of Tesla. Well, why not sell a quarter of that half a share? I mean, this is real money we're playing with. And I think that people have to look at what they own, unless they're playing companies that have lots of, that have big dividends. There, I'm not advocating that. Those dividends should be reinvested. But if you're in a high flyer, I want you to look at that high flyer. I want you to ask yourself, what would happen if it went down? Would it be something that you could handle? Because stocks could go down again. Right now, I like the market very much, but that does not make it so. Therefore, there shouldn't be discipline. You can like the market and be disciplined. And that's the way I am, and I will always be.
Now, I want to circle back to what you mentioned at the top of the show, which is the Wall Street Journal is reporting that Massachusetts security regulators will file a complaint against Robinhood, saying that while the company marketed to inexperienced investors, they did not implement controls to protect them. I've actually been having a lot of conversations with both friends and people in the financial space about whether or not Robinhood should do more to educate their investors. So, Jim, do you think that Robinhood should implement more tools to aid investors, or is that really our job alongside perhaps like a Wall Street subreddit?
No, look, I think that they should be involved like that. I think they are trying. I mean, there was a word that was very disturbing in that complaint, which was they didn't like the gamification of stocks. Now, I'm sorry, but stocks are a form of investing, but some are gambles, and gambling is a discipline. Now, those who are sitting here thinking Cramer, who went to Harvard and Harvard Law School, has some guts to be able to say, if they're studying securities, that stocks are like gambling. But my point is that I don't think they should be like gambling, but they are gambled on. So in the same way that when I started Mad Money, I knew people were speculators. I mean, these are speculators who could speculate on the Eagles, this weekend without a problem, playing the Cardinals, or they could speculate on Teledoc, all right, or SolarWinds, as was done in Reddit today. And what I look at and I say, there's no difference. So let's stop. Let's cut it out. One of the greatest calls of the year came from Barstool. And I was happy to be interviewed with by Dave yesterday. And it was to buy the airlines at the absolute bottom and to buy the cruise lines at the absolute bottom. Was that gamification? Well, you could say Dave Portnoy is one of the foremost people when it comes to sports gambling, which, by the way, is legal. I mean, what the hell? I mean, it's legal. And a lot of the disciplines that he has apply to stocks. Now, in my first book, I wrote about how I learned a great deal from a book called Picking Winners by Andy Byer. And that was a book about horse racing. And the disciplines in there have stood me well with stocks. The people who come on air and they don't want to deign to even look at that view and therefore look down on me, all I can say is I made millions and millions. I mean, I'm not saying saying that. I'm not saying that to say I'm rich. I'm saying, who are you to denigrate the notion that people who have different skills, whether it be gambling on horses, whether it be gambling on cards, the skills that I use when I play blackjack are every bit of the skills I use here. And I win 50.5, which is exactly what you're supposed to do. Discipline, discipline, discipline. Don't hit on when the dealer has a 16, let him bust. I mean, that means like when Nvidia's down 15% and business is good, buy Nvidia. These are disciplines. And I'm not talking about the notion of the cards come up and cards have no memory and who knows, you got 6 decks. I'm talking about discipline. And the same discipline that you have of not betting on a situation when someone hits on an 18 when the dealer is 20, when you see a face card showing. I mean, I see that. That's not discipline. When you go in and you buy Shopify up $56, that's not discipline. I am about discipline. And I don't care what it is involving money, whether it be trying to get the cheapest washing machine, the Whirlpool, whether I go to Costco or I go to Lowe's or I go to PC Richard, whether it's because I try to get Costco down $1 like it is today, whether it's because Nike gets intriguing ahead of the quarter. These are disciplines. And I don't like this idea that they use that term gamification as if these people are children. There are people with money who have done research. JP Morgan and Morgan Stanley have confirmed that. There are people who understand the options market. We all felt when we did our roundtable for Robinhood, the foundation, That it was without a doubt, these are the most informed people that we've come across. They Google things, and that gets them into the research. They research things. They know far more than people did during the year 2000. So let's stop denigrating them and let's celebrate.
Jim, in your stop trading this morning, you discussed Stanley Black & Decker, which did post earnings on Wednesday. Do you think that this is a solid stock to add to your portfolio? And if you do, what level would you buy it at?
Now it's up 7. It was up 4 when I talked about it. The second time, it was up 2 when I first talked about it. I think that what you have to do is you have to say, okay, look, if Stanley Black & Decker is good, let's go buy some Lowe's, which is still 15 points from its high. If Stanley Black & Decker is good, let's go buy some Home Depot. Home Depot right now is 22 points from its high. Home Depot is only up $1.30. That is nuts, given the fact that Stanley Black & Decker says that their organic growth is 10%, not 3 to 5%. There's not a lot of analogs to Stanley that are quality enough for me to be able to say them. Because I don't want to be able to say, I mean, Fortune Brands, Home and Security. I mean, you could argue that. But I just really, really emphasize that this is major news. You could argue that you need to buy Whirlpool. By the way, Whirlpool's on allocation. For so many of theirs, Whirlpool's only up $2. It's down 27 points from its high. They are on 17 points. They're on allocation for many of their best products. Allocation. And it's only going to get more prolific when we get $600 for man, woman, child from the government. So would I buy Stanley Black & Decker up 7? Well, again, my discipline says you got to wait. But the others, Lowe's and Home Depot, you buy them right now. Right now.
Jim, you've been pretty avid in talking about the cautiousness that investors should take when it comes to buying into IPOs that are coming to market. And now we have Wish's parent company, Context Logic, pricing at the higher end of the range, about $24 a share, which does mean that it raised $1.1 billion. So what is the word of caution here for investors?
Well, I mean, I think that some of these are just absurd. I mean, when you got, let's look at it this way. I think Snowflake's one of the greatest companies on earth. I really do. And I think Frank Slootman may be one of the best CEOs on earth. But that stock lost 100 points. It lost 100 points from where it was on an 11 million share lockup expiration. But that's because the stock was up so much from the ridiculous way that it came public that you knew people were going to lose money. Is Snowflake right here at 92 billion? I'd buy some. I would absolutely buy some Snowflake. But I don't like situations where you're down $100. When you're down $100, you're going to blow it out. You're scared. You don't know what's wrong with Snowflake. You're frightened. And I'm trying to avoid that situation.
You mentioned that Dave Portnoy had one of the best calls of the year with the airline stocks, and that comes as United Airlines is beginning to collect contact tracing information from passengers in the coming weeks, and we also have the FDA authorizing the fully at-home Illume test. I mean, do these announcements help to hopefully not only slow the spread, but maybe help to ease the burden on the economy, on the airline stocks, and on traveling that we've seen?
Well, we had a really negative piece about the buy to sell on some of these airlines, but JP Morgan, so they're not going to rally. United Airlines has been forward about everything involving masks. This contact tracing makes a lot of sense, but it won't matter. What matters is plain and simple, the vaccine. And if we get Moderna to step it up more, if we get Pfizer to do $1 billion, we get J&J do another $1 billion. Remember, billion just means 500 million. There's 333 million Americans. Okay. Everybody's got to be vaccinated. Now, there's some people who will hold out and not be vaccinated, and there'll be a lot of people who already have had this horrible disease. So maybe it's 300 million that need it, but they got to get it, and they got to get it by the end of February. And I think that there are a lot of people who just want to hold out, and I think that those are the people going to go buy stocks for the 600.
Jim, I know from the hundreds of shows that we've been doing together that you're not always a fan of cannabis companies, but this TILRAY-APHRIA merger is quite an M&A deal. So what kind of approach do you suggest for investors looking at this closely and perhaps trying to get in?
Well, I mean, look, Erwin Simon's a good operator. I mean, he ran Hain. Now Hain got in trouble because he got a little. He bought things too fast. But Canopy is the one with the big money and the great management. And Canopy's down today. I mean, let's not screw around. Let's buy the company that has the liquid, that has the candy, the company that has the best balance sheet. Let's buy Canopy. And that's what people should be doing if you believe in cannabis.
All right, and with that, Jim, I want to head over to our Action Alerts Plus daily show for members because we're going to be talking about Take-Two, and I want to get your latest thoughts on the video game company. So with that, I'm Catherine Ross, and we'll see you tomorrow.